build resilience by making careful decisions on borrowing, said Christine Lagarde. Nigeria's debt is relatively low at about 12% of GDP, but it weighs heavily on the public purse. Already about 35 kobo of every naira collected by the federal government is used to service outstanding public debts. Now, the thing is, there is a frisson of fear about debt naturally. That comes naturally. It's a human reaction. But I want you to demystify it. And I also want the rest of the panelists not to be too polite. We're mixing it up here. So step in if you hear anything that you want to answer. But I just want IFC to sort of comment on debt and also give her a perspective on what you've heard so far.
We believe very fundamentally that debt is not a bad thing, and Christine's comments, I think we take them very well. They're well appreciated. By the way, today that 35 kobo per naira is more like 60 something or 70 kobo per naira.
Yeah.
So it's weighing even more heavily on the public purse, but I think done in a strategic way, replacing local currency debt with foreign currency debt, which is certainly needed in today's climate. But I think the bigger question of debt and the role that debt plays in an economy like Nigeria is very important. And what we've seen globally is that when you have very strong and vibrant debt capital markets, you then have a funnel, a funding mechanism for infrastructure that's critically important. And again, the key piece of that is also to really have local investors. So one of the big challenges I think we have in the Nigerian context is how do we mobilize domestic capital sustainably and move it into infrastructure and move it into parts of the economy that require patient long-term capital. This is a big question, and the debt capital markets are going to play an important part of that. I would like to say that in the next 5 years, I think the innovation that we've seen in Nigeria today will start to bear fruit, and we'll start to see a lot more innovation in the debt capital markets that will drive local capital, also attract international capital, but drive particularly local capital into infrastructure. So we are, as a sort of World Bank group and Bretton Woods institution, concerned about the debt overhang with respect to debt payments. But as I think everybody understands, the problem is that the revenue base is too small. It's not that the debt itself is too high, it's the revenue base is too small. And so again, over the next few years, when you couple having a large focus from government on tax compliance, that is key. I think there have been a lot of important efforts there. A lot more needs to be done. Then you get to tax reform, and then you start to see a balancing of that. And so then Nigeria's debt profile doesn't look so scary because you have enough revenue to justify all of the debt that's necessary to drive the infrastructure development that will be important for Nigeria going forward.
It has been used, in my view, in some quarters, not all quarters, in some quarters, as a political scaremongering tactic. And what you hear is, oh, government shouldn't borrow because they are mortgaging the future of your children. And you also then hear, government shouldn't increase taxes either. And yet, government should provide services. From which resources? And I think that those who know, this is a matter we must have consensus about. And those who know must stand up and speak up. First, that there is nothing wrong with debt. Secondly, good debt is debt in investment, in infrastructure. Economies where people own homes are economies where people borrow to buy houses. You don't buy them cash and carry. The countries that define what other countries do all over the world, whether in terms of their military might, their sporting prowess, have some of the highest debt portfolios in the entire world. And we deceive ourselves if we do not seek to raise capital and debt in order to invest in those infrastructure, power, airports, military spending, stadia, sports, medicine. So don't borrow. But your health infrastructure is in a poor state. You now take the little savings that you have and travel on an airplane by somebody, owned by somebody who has borrowed, to go and get health care in a hospital built with borrowing. Who is doing good business? So the point to make, therefore, is to have a very clear understanding and conversation that investment debt borrowing to finance investment in infrastructure is sensible borrowing if the parameters are right. Back here, we raised bonds of 275 billion, I think, to fund most of the infrastructure that drove this state. I will speak to two. We raised 10 billion naira. 5 went to start the Lekki Link Bridge. The other 5 went to start the Blue Line. I think, if I recall correctly, we borrowed at 11%. You can't raise that kind of money anymore. So for those who argue that we were mortgaging the future of their children will inherit those assets. Some of them are already jogging on that bridge. Now, if we had not had the courage to make that decision in spite of some of the commentators who still pervade, then their children would have to come and build that bridge. Maybe start today at 27%, at 360 to 1, and see where that 5 billion to start would have even gone. So it's a very poor argument.